Well, Ghana's cocoa sector is undergoing a massive structural overhaul following a collapse and its crisis we're seeing on the global front. The global prices of cocoa have been tumbling downwards, and the transitional path of raw beans and adding some value to it is what government of Ghana is focusing now as the next phase of turning around the fortunes of the cocoa sector. Tonight on Business Focus, we ask, will leveraging the value chain of the cocoa sector ensure sustainability and profitability? These are the two major anchors of our conversation this evening: sustainability and profitability of the cocoa sector, taking into consideration government's next focus of reviving the fortunes of Ghana's cocoa. We'll tell you what the situation is with the cocoa processing company, the CC, the produce buying company, the PBC, and the cocoa marketing company, CMC. These are three agencies or institutions that also operate within the sector, also with an umbrella body of Cocoa Board, giving that supervisory role. But then again, they have their specific roles, and it will tell you what their state of affairs is when it comes to their financials and whether government would have to do a lot more than expected to revive these companies. As always, Business Focus is probably brought to you by EcoBank and Telecel. Every day, people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd want to remember: star 770 hash. Yes, star 770 hash is a new EcoBank money emergency number. Star 770 hash ensures instant money transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any moment of money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for your solutions to your money emergencies. EcoBank, the Pan-African bank. As always, we're live on TV3 Ghana on Facebook, on DSTV channel 279, all across the world on 3news.com. I'm Alfredo Conce. And this evening, industry aspects and then also financial analysts will be joining us to help us to understand what the way forward will be with this conversation of cocoa and government's idea of ensuring that 50% of at least 50% of the cocoa beans retained and value added to it in terms of processing. But before that, let's get into the currency market and find out exactly how the city is faring against the major trading currencies across the world. And we've seen already just some level of stability as compared to last week as well on the currency market. The city is trading at 11 cedis to the dollar. And then also for the pound, we've seen it at least a little depreciation of the cedi against the pound as compared to the levels last week. And we've seen some responses on the market because for the second pricing window in the month of February, talking about price of petroleum products at the pumps, we've seen some increases at the various fuel stations, much of it to the reaction of this and other many factors. As we've seen, there are three factors that influences petroleum pricing at the pumps. This one is one of them. The currency differentials, how the cedi fares against the dollar, plus the taxes, and then also the crude oil prices on the world market. But locally, we have control over this, and that's what we've seen over the period. And that's what we're seeing right now. And when it comes to the commodities as well, here's where we give you an idea of how especially cocoa is faring on the world market. And this is going to be the major focus of our conversation tonight. Cocoa continuously sees a drop in price on the world market, now trading at $3,673 per ton. That is a 51 percentage point reduction as we have seen over the last at least 9 months. And then if you juxtapose to what happened as well last week, this was trading about 3,792. So we're continuously seeing a reduction in the price of cocoa per ton on the world market. Gold as well experienced just a little reduction as well as compared to last week, trading at $4,992 per ton, per ounce, I beg your pardon. And then also crude oil now, as we have seen, an increase in the price of crude oil is what has influenced what is happening on the world market now. And then locally at the pumps, now trading at $68.44 per barrel. Now, what that means is that because of what is happening at the pumps, this is one of the areas to look at. This price of crude oil on the world market has seen an increase, and you see a direct reflection of what's happening at the pump. So we'll give an idea of how all of this trickles down going forward. But on the treasury bill market, there's been consistently government exceeding its target. And that is a good indication for many who are watching the market, especially because the finance minister last week did indicate that government is mulling the idea of reissuing or bringing back the cocoa bonds. You recall that past 4 years, we've had people who invested in the bonds having to grapple with the DDEP's impact and the haircut that they took. But then with government continuously exceeding its target in the treasury bill auction, we'll see how the confidence in the treasury bills would also now extend to the cocoa bills. It's a conversation we're going to be having this evening. But the 91-day treasury bills now with a yield of 8.61%, 182-day bills having a yield of just under 11%. And we've seen the 364-day bill as well consistently maintain the yield of under 10%, and how this also will translate into investor confidence. It's a big issue we're going to be having this evening here on Business Focus. Now, we're going to go for this quick break. When we're back, my guests will be joining me in the studio and online as well on Zoom as we have this conversation on what the next phase of the cocoa sector will be here on Business Focus. Taking into consideration the focus on Business Focus tonight is going to be on the PBC, CMC, and also the produce buying company. Stay with us. We'll be back shortly.
How may I help you today?
We'd like to open a bank account.
Welcome back to Business Focus on TV3. We're live on 3FM 92.7, as well as on TV3 Ghana on Facebook and on DSTV channel 279, all across the world on 3news.com. We're also on 3 News on YouTube. Now, as always, probably brought to you by Ecobank and Telecel. Now, this evening, in a major move to stabilize the nation's struggling cocoa industry, the Cabinet has directed the Cocoa Board to immediately commence the payment of all outstanding arrears owed cocoa farmers. Last week, we understand some cocoa farmers are already giving indication of some receiving some payments, which is one that we're keeping an eye on to track as well. Now, this directive was announced earlier last week after that emergency cabinet meeting convened by the president. In addition to that, there was a rescue plan that the finance minister announced, including the decision now to have at least 50% of the beans produced in this country processed locally. Government is also moving away from this idea of syndicated loan by sourcing for funding to buy our cocoa beans locally through the issuance of cocoa bonds. This is not the first time we've gone on this path, but we'll be finding out what can be done differently to attract investors into the sector. Because cocoa is still a viable commodity that also attracts international investors. So if that's the case, looking locally, what are the dynamics? That's what we're going to be having a conversation on this evening. Joining me is Joe Jackson, the CEO of Delex Finance and a financial analyst. Mr. Jackson, good evening. Thank you for joining us.
Good evening. Good to hear from you.
Wonderful. Dr. Eric Boachi-Yadom is Senior Fellow, Africa Policy Lens. He is a lecturer at the University of Professional Studies, UPSA. Thank you so much.
Thank you, Alfred, for having me.
For joining us. Also, we'll be joined by Nelson Godfred Ajiman. He's president of the Coalition of Farmers Ghana. He's a cocoa farmer himself, so he's going to be joining us on Zoom. Dr. Kofi Nsia Poku is the president of the Association of Ghana Industries, AGI. They've started making some proposals that if they are allowed, they would also come together and build some processing centers at the various cocoa growing areas. We'll be finding out how that will also play out. Dr. Kofi Nsia-Poku is going to be joining us, the president of the Association of Ghana Industries. But before that, let's take a listen to the Finance Minister, Dr. Kasiel Ato-Forson, last week, specifically stating what the way forward will be in government's quest to turn around the fortunes of the cocoa sector. Take a look.
To bring relief to unpaid cocoa farmers, Cabinet has accordingly directed the Ghana Cocoa Board to commence immediate repayment of all affected cocoa farmers. 2, a new Cocoa Board bill will be presented to Parliament to implement an automatic adjustment of producer price to align with movement in the world market price, exchange rate, and other key variables, and guarantees a minimum of 70% of gross FOB price to be paid to the cocoa farmer. A new financing model for cocoa purchases and related operations with associated benefit for increased processing will be introduced effective 2026-2027 crop season. The new financing model will utilize domestic cocoa bonds to purchase cocoa and repay the cocoa proceeds within each crop year. The bonds will be used to raise a revolving fund for Cocoa Board to turn around at least once during the season. The model will also revive the indigenous license buying companies that have been completely thrown out of business as a result of the current financing model. State-owned produce buying company, PBC, will be revived to resume full operations and become the leading license buying company in the cocoa sector with immediate effect. With the new finance model, Cocoa Board can sell beans of any volume to local processing companies to promote value addition and job creation. Cabinet has, however, directed that with immediate effect, the remainder of the beans for the crop year 2025-2026 should be allocated for domestic processing. Cabinet has also directed that beginning from 2026 to 2027 crop season, a minimum of 50% of all cocoa beans should be processed locally. This will be part of the Cocoa Board bill going to Parliament. Pursuant to this, the state-owned cocoa processing company, CPC, will be revived as a matter of priority to become the leading processor of Ghana's cocoa beans.
CPC to become the leading processor of Ghana's cocoa beans, and then also understand that PBC, some value will be added to it going forward as well. But bear in mind, the state of PBC is quite concerning as we speak, and I'm going to show that to you. So, taking into consideration the very noble idea that government has to now revive the cocoa sector through different means of especially adding value to at least 50% of the cocoa beans produced in this country. We're going to show you what the real state of affairs is with the produce buying company, PBC, and then the cocoa processing company, CPC. Because you heard the finance minister talk about these two institutions as one of three that would be the major approach to turning things around. Here's how the situation looks like. Ghana, as we speak, together with Cote d'Ivoire, controls 65% of the global share of cocoa. That is massive. You know why? Because when it comes to who has a say on how much cocoa beans is on the market, Ghana and Cote d'Ivoire has the combined strength. But do we, as a combined strength, also have influence on the pricing of cocoa on the world market? The answer is no, because of the element of value addition. So yes, raw material in terms of cocoa production and the beans, this is how much we yield. In terms of the combined strength of Ghana and Cote d'Ivoire, 65%. The rest of the world, 35%. They don't come anywhere near. But we have seen what has played out over time with this price of cocoa on the world market tumbling consistently downwards over the last at least 1 year that we've been tracking this period, right from $8,644 down to what we're talking about now, under $3,700 as we speak. That is what is partly also to blame in terms of what is happening right now, including all the forecasting that Cocoa Board itself as well did. Now, government, if you heard the finance minister, talks about these three companies going to be the major areas to look at in the next phase of turning around the fortunes of the cocoa sector. Cocoa processing company, CPC, the produce buying company, PBC, and the cocoa marketing company, CMC. Now, these two, CPC and PBC, a lot has to go into the revival of it. And we're going to show you the current state of affairs with the CPC and the PBC, because they are going to be responsible for processing or at least 50% of the locally produced beans effective 2026 and 2027. That's not all. Government is talking about looking inward, internally, to raise funding to buy our cocoa instead of the syndicated loan that we've seen over the period. And as a result, they are going to issue cocoa bonds. Now, and cocoa bonds books have to look good. And that's why you've seen government go on this path of loading some of the expenditure of cocoa bonds books onto other areas, so that when this measure comes into being, that is this new module of financing where domestic capital will be the way to go, we would now have to then look at what is the way forward. This is it. This is how the picture looks like with the cocoa processing company CPC's capacity now. Daily production, 700 to 1,000 cartons of chocolate daily. That is 100 grams bars. Then they are projecting to increase or double it by 2,000 cartons of chocolate daily, 200 grams. But when it comes to what the state of affairs is in terms of their financials, for the fiscal year ended September 30, 2025, CPC reported a net loss of approximately $11.47 million. Turnover for the year saw a sharp decrease of 37.9% from $32.8 million in 2024 to $20.38 million in 2025. The decline was driven by the low sales, particularly a significant drop in cocoa butter revenue. The balance sheet severely leveraged, short-term assets of $28.4 million, woefully insufficient to cover short-term liabilities of the $111.3 million. Despite having that annual capacity of 65,000 metric tons, cocoa processing company is operating with significant underutilization due to financial constraints and inconsistent bean supply, and that's another area to look at. Now they are going to hinge their hopes squarely on the proposed $97 million loan from Afri-Exim Bank for debt financing and factory retooling. That is for the CPC. We'll tell you how things look like with the PBC shortly. But gentlemen, I'll start off with you. Mr. Jackson, how things look like right now, and taking into consideration, first of all, the state of affairs of CPC, because between CPC and PBC, government intends to now look at the way forward in dealing with the cocoa sector. What's your take on the CPC situation?
The truth of the matter is that as at today, any loan we take on these two companies is really guaranteed by the public purse. These companies are bankrupt. And so the challenge you have is that how much will this, estimates of the working capital deficit for for PBC is over 328 million. Give or take, that's about $30 million already.
That's right.
Now, the losses, cumulative losses, are over 400 million. So, as much as we all want the value add, as much as the proposal to get CPC to PBC to work in this, the losses are massive. And even as we sit, local banks have taken PBC to court.
Sure.
And have garnished all the property they have.
Including the headquarters.
Including the headquarters.
Yeah.
So, really, a loan of 97 million.
This is for CPC.
For CPC.
I'm going to show you the PBC one, but this is CPC. This is what they are hoping they will get.
The question I have is that what changes in management, what changes in efficiency, what changes in productivity will ensure that 97 million does not become a debt for Ghanaians? Effectively, it's you and I. Otherwise, this money will be pumped in, it will be taken out by debtors, they can't borrow on their balance sheet. We have a problem. We have a deep problem. And as much as, listen, and when you look at this cocoa bailout, these monies are being borrowed in addition to transfers from Cocoa Board to the public purse of debt.
Yeah.
One in equity, two in cocoa road arrears owed. This bailout is expensive.
It's expensive, you say?
It's expensive.
But as compared to what exactly? I mean, the expected outcome is what the finance minister talks about. So that if we're going to have to spend this much.
My question is this. What is it cheaper to allow these two institutions to die and start afresh with new management, with a private sector input, or we should revive them? There are cases where, with businesses, revival can be more expensive than allowing creative destruction to take place.
You say creative destruction, what do you mean?
Creative destruction is exactly what I mean. Allow the two companies to die and start afresh. The private sector initiative.
That's
a private sector initiative to process. A private sector initiative to buy. Backed by the government. But the amount of money that are going to go and be swallowed into this is scary. Remember that if you pay the banks, you're going to pay the banks plus accumulated interest. If you pay salaries, and listen, as soon as there's money, other creditors who are going to pop out of the woodwork. How do we guarantee that what we know now is the be-all and end-all of these issues?
Doc, it's still on CPC, and I want us to treat one company after the other, because then it gives us a clear idea of what we're dealing with. CPC, negative margins for the fiscal year ended September 30. I'm looking at the accounts right now. CPC reported, as I indicated, a net loss of approximately $11.47 million. The turnover for the year saw the decrease of 37.9%. And in fact, this was driven largely by the drop in cocoa beans and then also the unavailability of enough cocoa beans to as it were process. And that's what the finance minister is talking about in now this directive, that at least 50% of our beans goes in there. But then this is an opportunity cost situation, is it not? Is it worth the path to take?
All right, thank you, Alfred. If we look at the situation we find ourselves, we may have to go back in time and find out what has been the challenge and has it changed. I have maintained, and I continue to say that nothing much has changed in the Ghanaian economic structure. I remember the last time I had a discussion with my senior here. He, in a way, thinks different, but I think that nothing much has changed. And he made a good point that are we going to get the right management, the right efficiency in terms of productivity in these two companies? If you look at where we find ourselves, let's go back 8 years ago, what it used to be, and has since changed. We are talking about this inefficiency in Cocoa Board, in PBC, and all the connected companies, because there's a history. Currently, we understand that even in Cocoa Board alone, their debt is around about 32 billion Ghana cedis. That is roughly, if we take as a dollar of 10 cedis, you are doing about $3.2 billion.
Let's even say 3 billion.
Yeah, let's say 3 billion. When you go to 2027, at the time the new administration or the NP administration was taking over, the debt that was left was around 19.6 billion. The problem we face now, one is structural. Structural means that nothing much has changed. Taking at 19.6 billion, at the time, the dollar was around 4.2 cedis. So take or leave, it is about, the debt that was left at the time was around $4.9 billion. And now the debt, instead of going, it went down a little, but it is still high for us to overcome the structural problem that we are facing, coupled with the shortfalls that we have experienced in the cocoa output over some time, which led to the contract being rolled over. And we also understand, like you mentioned, one of them was the unavailability of the cocoa beans for them to even
That's
process.
for CPC. Yes.
Yes, for them to process. So if we endowed all this investment and we don't tackle the fundamental problem of cocoa board to ensure that we get enough yield to even feed these factories, all the money that we borrowed, like Mr. Jackson said, will now be pushed on to the average Ghanaian to pay. So we have to be able to tackle the structural issues of the debt that is killing the sector, and find a way to reduce it. We cannot eliminate debt entirely. Now the government is planning to go back, and use some and borrow domestically to fund the sector. But I think the structural problem, we need to find a way to address it because nothing has changed. Then secondly, there are operational inefficiencies that we need to be able to look at. You see, all the challenges that we find ourselves as cocoa farmers are facing today, we can attribute some percentage to structure, but we can't take operational out. That the fact that the people that are supposed to take decision so that the farmer will be protected, because that's one of the mandates of Cocoa Board, the farmer will be protected, did not take prudent decision enough. You will show the trajectory of the cocoa price for the past about 24 months or so. And you can see that the price was going down. In August, when Cocoa Board fixed the farm gate price to about 51,000 per
660.
Yes. The price was going down. Then in August,
no, it's in October.
In October, the increase is 58,000. When the trajectory shows that the price is going down, why would you increase it? We can understand that it was not a nominal increase, but rather changing the exchange rate caused the price to go up. But you can see the trend for consistently 10 months, the price is going down. And you did not take a decision. I don't know whether there's a game they play, is it Aviator? how the thing goes up. You see, so I don't know whether Cocoa Board was using, is it the aviator tactics? The thing was going up. You should lock in at a point that looking at 12 months consistently going down, the price is going to crash at a point. So why couldn't you lock in at that particular point and you waited for the price to go down? And even for you to increase price, it also shows an intention that you were not prepared to pay that price you announced because the price were going down.
You know, this one, because I wanted us to now disintegrate the conversation to the various agencies,
yes,
the CPC, BBC, and then also CMC. Whenever this conversation about the locking down comes up, you have Cocoa Board also say that, look, already some beans have been sold. Okay?
Sold forward.
By the forward sale, as we have seen consistently by the previous administration, because when they took over, already there had been the forward sale.
Yeah, about 300 and something undelivered.
Yes, and that's also a major problem.
Yeah.
And that's why, for the Cocoa Board situation, it's a big conversation that consistently we've been having. What I want us to look at now is these various other agencies that the finance minister is talking about using as a means to redirect the focus of the cocoa sector. If Cocoa Board is able to get things right, all right, it trickles down to the others.
Exactly.
But then, with the position of CPC now, if the finance ministry or the government's plan to go on the market, buy beans, and then get it processed locally, goes through all things being equal, already they are faced with this challenge of management and other related matters that they also have to deal with. What do we do to deal with this situation? That's where my concern is.
I think that, you see, I came from the Cocoa Board to connect it to this point that there is inefficiencies that if we don't deal with, no matter the investment we put in there, we will still be having those same challenges. And I think that the government should create an environment for private sector to lead this agenda, to drive it, even for the big push that government wants to do. A greater proportion of the investment is coming, the government is expecting to come from the private sector. So I don't see why this case government should be the one pouring the investment. Just create the environment, an economy that is about 100 billion to raise less than 100 million private investment. I'm sure that we should be, if we make a good case, we can raise that money through private investment, and the private man will ensure efficiency, and ensure that things are done properly, rather than always government trying to invest so much, and in the end, the debt that has been borrowed come back to the ordinary Ghanaian.
I see. But Justin, and even though I put out this situation with CPC, if you look at the Ghana Stock Exchange performance, it's interesting. Despite the grim fundamentals, CPC stock saw a 200 percentage point price appreciation over last year. As of February 9, when we checked, closing at about 6 pesos.
Listen, processing of cocoa in Ghana is going to be a big business. And the market is interesting because the market, I suspect, priced in the fact of a bailout. Yeah. So they were preparing themselves for a bailout. Because there have been indications of this going on for a long time. The point is this: which is better? For us to put in $97 million into CPC, close to $1 billion, or to work with private sector money to get processing done locally. And the point he keeps making is this: if we don't fix the structural issues with Cocoa Board, where will the beans come from to process? It's not an accident that there were no beans available. True. We were producing beans, but the beans had been forward sold, and Cocoa Board was bound to deliver them to the people that collected the money from.
At a specific price that had been sold.
Yes. Earlier. It wasn't like the beans were sitting and Cocoa Board says, I won't give you the beans. That's not what happened. And so we ask ourselves, as we sit, what happens? What happens? And you see, the scary part is we borrow $1 billion. cedis, $97 million to take out cocoa board, to resuscitate CPC.
Mm-hmm.
What happens then?
Let me bring in one of our guests who has also written quite extensively on this matter. Mr. Nelson Godfred Ajiman is the president of the Coalition of Farmers Ghana. Mr. Ajiman, good evening. Thank you for joining us.
Good evening, Alfred, and good evening to your viewers and listeners.
You have already indicated some specific benefits of these reforms that the finance minister put out earlier. That was last week. What are those?
Yeah, actually, the most important thing is elevating the discourse from a political debate of two parties who are always thinking about votes to the level of policy with its economic and development implications on a sustainable basis. And that is what is admirable about this policy choice. Because if you've listened to most of the debates, it's about which party has done well in paying farmers or not paying farmers, and who is to blame for the past mistakes, etc. And then the government and the minister for that matter said, fine, whatever has gone wrong, but let's tackle all the issues comprehensively from a policy perspective, right? So for me, that bold and courageous leap to take the turn from politics to policy and be comprehensive about solving all the nagging historical challenges in the cocoa sector is what this policy move of the government is about. And that is why all the panelists, what they are saying, I support. You know, the idea of moving towards sovereignty, domestication of our resources and our wealth is a brilliant thing that reflects in this policy. In the same way it reflects in the way the gold board was set up. So those things are good, right? But maybe, and for that matter, the issue of bonds, the issue of increasing processing locally, reducing export of beans, getting into the higher end of the value chain, beyond just farming and all that. These are all key elements of the sovereignty and domestication part, the view that more benefits from the sector will come to Ghana and, if you like, Ghanaians. I've attempted to summarize that. Right? So these are important policy direction. The thing I want to find out about are the flesh we put on the policy outline. For example, what is being discussed. Growing domestication and sovereignty does not necessarily mean government doing business or government leading business. That's the area I differ a little bit. Government should find a way of the benefits coming to Ghanaians, but having those who can do the job better than government itself doing it. Because if we look at it, how many government corporations, companies are doing very well in this country?
Okay.
You see, that's the issue we should look at. And these key 3 or 4, Cocoa Board, CMC, PBC, and CPC have really done well. If it were private entities, they would have done far better.
I see.
So, yes. So, for me, to enhance the good motive of sovereignty and domestication and the benefits thereof, government should find a way of giving all the help, including financial policy, regulatory. I know laws will go into parliament or bills will go into parliament and all
to,
that.
to the
But
private sector. Right.
It should do it in such a way that business people, private sector, will run the thing.
Okay.
And if it's taxes government want to take, so it will get what is forcing her to run the business with government structures, then he has to modify that.
Right.
So that is why I'm afraid. That's why I'm afraid, because of the history.
Okay.
That government entities don't run well.
I see. You made that point. You made that point. You made that point because you keep bringing in the private sector. Let me bring in Dr. Kofi Nsia Poku, is the president of the Association of Ghana Industries. Dr. Nsia Poku, first of all, thank you for joining us. Your quick take on the proposal and the reforms that government, through the finance minister, announced last week.
Yeah, thank you very much, and thank you for your viewers. It is really a very big good news in the sense that all along I have been saying that whatever we produce in Ghana, we need to process. And normally, by convention, if you sell the raw material and you get one, when you process fully, you get 4. So if you export and you get 1 billion, when you process and you export, you might get about 4 billion. And for me, that is what we should be doing. So that is really a very big good news. And as AGI, we are ready to put our facilities to start processing. And we even want to process not as semi-finished, but really as a finished product so that we can export to various countries, including Europe.
That point you just made about your readiness to also help in putting out facilities, processing facilities, I'll stay a bit with you on that after this quick break. Stay with us. This is Business Focus. Dr. Kofi Nsia Poku, you just heard, the president of AGI. I also have my guests in studio. We'll be back shortly after this quick break. Stay with us. medical emergency, you name it. But many Ghanaians don't know the emergency numbers well. Here's one you would want to remember. Star 770 hash. Yes, star 770 hash is the new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. And that's the catch. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your aid. EcoBank is the Pan-African bank. Before we went for that break, Dr. Kofi Nsiapoko, president of AGI. Doc, you make the point about AGI and your members being ready to establish these processing facilities in these cocoa growing areas. But let's get a bit more detail into that. How is that supposed to play out? And do you have the funding already? What kind of engagement do you expect in the coming days on this?
I think that is what government wanted us to do. They have specified that they want facilities in the cocoa growing areas. If that is possible, that is fine. Otherwise, we can put it in Accra, Kumasi, or Tema, whichever they want us to do. Wherever they want us to put the facilities, we are ready to do.
I see, but there's PBC, there's CPC as well. So how do you intend to also, and then the cocoa marketing company, how do you intend to have all of those three play out within your framework that you're proposing?
Well, we all know that government facilities normally do not work well. So if government is also ready to partner with private, we can welcome that idea. Because cocoa processing has been there for a long time, always making losses. But there are private processors who are making profit. If they are using the same raw material, same facility, why are they making losses and others are making profit? It's because the others are private. So if government is interested in working with the private sector to redevelop the place and run it, we are also ready.
And I thank you for this. And maybe quickly, in what form do you expect this engagement to take? The readiness that you talk about, quickly.
We can do a PPP, or we can analyze and see whether private consortium can take over and run cocoa processing. I think it would be a very good idea because they have the capacity, and then we can find the money to buy the beans.
Right.
They already have brands in the market. They are making chocolate. We can add other areas to it. We can make chocolate spread and all the others. And also, by extension.
Wonderful. Thank you for this. And maybe quickly, 30 seconds on this, quickly. Mr. Jackson, quick one.
Well, first, domestic contribution does not always mean government's contribution. Domestic contribution can be private sector.
Thank you.
And we just had the private sector say, I have money. And we can do a public partnership, or we can go to it alone. We have to explore that before we go to the public purse.
Thank you very much, Joe Jackson, is a financial analyst. Doc, I do appreciate it. We have to run out on this. Thank you so much. Mr. Ajman, thank you as well. Dr. Kofi Nsiapoko, thank you so much. I'm Alfred Fonse. News 360 is up next. Stay tuned.